remember back when Mitt Romney ran for president? He released his 2011 tax return to the public. We're going to look at that tax return, and you might be surprised at what we can learn from it. We'll see how he and others of the very wealthy class invest for income. When Mitt Romney released his tax return, he was criticized for paying taxes at a very low percentage rate of under 15%. Well, as it turns out, that was true. But what I really like from Mitt's tax return is what we learn about how he did it, how he and Ann invest for retirement income. And it's not just Mitt. This is how wealthy people generally invest for income. The first thing we notice is that Mitt received no wages in 2011. You could say he was retired. But he did have income, lots of income. Mitt's total income in 2011 was $13.7 million, and his total federal tax was $1.9 million. Mitt's federal tax bill for 2011 was just over 14% of his total income. But let's look a little closer. Mitt had over $3 million in taxable interest. Most of this came from government bonds. Mitt also received dividends of $3.6 million in 2011. But notice that $2.2 million of that amount, or more than 60% of his dividends, are considered qualified dividends. What are dividends and what are qualified dividends? Well, that is the key. You could call it the golden ticket of retirement, which is what we've been talking about. Mitt certainly uses dividends to his advantage, and so can you. Dividends are the cash income that profitable companies pay to their shareholders. Companies are in business to make a profit, and when they make a profit, they can pay those profits, or a portion of them, to the people who own the company, the investors, the shareholders, people like Mitt, people like you, and like me. Great companies with a proven record of success can pay you regular dividend payments from their profits, monthly or quarterly. And they could potentially grow their profits year after year. And as they grow their profits, they can raise their dividend payments. That means a shareholder could collect a recurring cash income for retirement that could actually increase over time. Some companies have long records of paying their shareholders a dividend every 3 months for 30 years or longer. And many have actually increased that dividend payment every year. Notice, we aren't talking about the stock market going up or down. No, what we are talking about are companies that have been in business for a long time that pay a portion of their profits to their shareholders as a dividend. I could give you dozens of examples. But, and here's a retirement income strategy, I really like the idea of owning many quality blue chip companies, 10 or 20 or more, each one sending me a dividend check every 3 months. Which takes us back to Mitt Romney. Mitt's tax return shows us over $3.6 million in dividends, both ordinary and qualified. Ordinary dividends are taxed as ordinary income at your highest rate, like bank interest is taxed. But qualified dividends are taxed at special, much lower rates. Mitt had both ordinary and qualified dividends in 2011, and both make good sense for retirees. But there are big differences in how they are taxed. And to me, this is just stunning. Because of the special tax treatment for qualified dividends, and because of new changes to the tax law for this year, a married couple filing a joint tax return in 2018, making qualified dividend income over $100,000 per year, could literally pay 0 federal income tax. Another couple making over $400,000 per year might pay income taxes at the 35% federal rate, but still pay just 15% on their qualified dividend income. That's less than half the tax. No wonder Mitt Romney had over $2 million of qualified dividends on his tax return in 2011. Qualified dividends are not just for billionaires. They could benefit you too. So, do you want to see how qualified dividend income could work for you? How much, or how little tax you might pay? I can help you with that. And we've made it easy for you. I'm located here in Utah County. But first, wherever you are, you can schedule for yourself a no-cost, no-obligation telephone strategy session with me. We'll take about 20 or 30 minutes on the phone, and it won't be a sales pitch. It will be a telephone conversation about you, about your needs, and how these strategies could apply to you. Just click on the scheduler link to set your telephone strategy session with me, and we'll talk about that.